Good morning. It's Thursday, April 17th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So another brisk here morning in Florida, about 54 degrees. Should have went with the hot coffee, not the iced coffee. But the markets, they are going to be closed entirely for Good Friday, but I will be sending out stories, headlines, charts, and trade ideas to our clients that I find to be noteworthy. If you're interested in becoming a client, please get in touch with our trade desk in the description below, or send an email to info at Blue Line Futures. So some of the overnight news, some of the things that I've been following here. One, Trump did send out, I believe it was on Truth Social, a tweet or whatever they call it there, that Powell's termination could not come fast enough. So it's going to be really interesting to see how that plays out once Powell does actually leave office. Is it just a puppet for the administration here that's going to cut rates aggressively? Now, yes, inflation, yes, employment is holding strong. Inflation has come down, and a lot of key components are starting to move in the right direction. But the Federal Reserve, I understand their standpoint where they are unable to determine what these tariffs, what these trade implications will be, because there's such a fluid situation right now. What happens if supply chains do get shut off and we see prices of goods and things like that rise dramatically? And on the inverse side, what if we see these things really cause an economic downturn and a recession, and he does need to cut rates aggressively? And yes, he's behind the curve. The way the Federal Reserve does act is they do look in the rear view mirror. They do not project forward guidance really much more than the dot plot, but that's a newer thing here. Realistically, they do need to work in the environment that they're in, not the environment that they want or are projecting to be in. So looking at the Dow Jones, another headline, if you're long that, it's down about 486 points right now, so it slipped about 1.2%. United Healthcare shares down about 20% in the pre-market trading after the health insurer cut adjusted earnings per share guidance for the full year. One of the things I don't like about the Dow Jones is you really got to watch some of these larger components, because of the fact the way the weighting works on it is that United Healthcare is the largest component of the Dow Jones. When that guy was killed here recently, that stock had really sold off there dramatically, and the Dow Jones was looking to be one of the best performing indexes out there. So it's really important to pay attention to the particular product you're in and what are the weightings that are involved with it, especially people that get involved with things like GDX and SILJ and all these other things here. You want to know what these particular components are and then how they're going to impact the underlying product. That's why the product that I prefer the most is the futures contract, because of the fact that it's a pure price play specifically on the underlying commodity and asset. You don't have these outside variables taking place. So let's take a look at the equities, the US dollar, gold, interest rates. So the S&P 500, we did roll over yesterday, and it looked to give people an uneasy feeling, especially that sell-off here. But stock futures, they are rebounding a bit on Wall Street here, as we have some positive signals here from initial US-Japan trade talks, with the S&P 500 climbing about 0.5% right now. The NASDAQ up just under 0.75%. Again, the Dow slipping about 1%. The Russell up about 0.5% as well. All your fangs in the overnight up here just a bit slightly. Now your key resistance level on the S&P 500, about 54.20. So you can see that that's the level where we really started to break down again, and it's a bit lofty between 54.20 on up to about 5,500. So 5,500 really, I think, is the kind of bull bear line at the moment, because it's the return to the scene of the crime, where we started to break down from that April 2nd when the tariffs were announced, April 3rd trading, so that 5 p.m. trading where we gapped lower and we sold off and it looked like a bloodbath from there. That's where we would be getting back up to. So again, old support, which was dramatically broken, is now new resistance. And I think because of the size of the wicks that are involved in the movements that we're seeing in these markets, that these resistance levels, they really are very firm in nature here. So the US and Japan, they did kick off their tariff negotiations, aiming to reach a deal as soon as possible, while the Trump administration prepares to pressure nations to curb against trade with China in negotiations over the US tariffs. So I believe that the goal here is to isolate isolate China and then work out arrangements with surrounding countries around that to broaden and strengthen U.S. relations across the board. Some other market moving news that we're going to see here today is that the ECB, that's the European Central Bank, they are expected to cut rates for the 7th time. Now this comes as Fed Chairman Jerome Powell, and this is what really upset Trump here. He reiterated his commitment to keeping inflation in check while Treasury yields they climbed and the dollar index rose here slightly. So while he was speaking, though, we did see the dollar index slip and we did see other markets really moving up. We saw the gold market take off. We saw some safety plays move up, and we saw U.S. equities take a dramatic fall. Now looking at gold overnight, down about $4.50. We did reach a new all-time high in the overnight session, and it was really that optimism that we saw yesterday. So gold is pausing its rally again because of the US-Japan trade talks, but it did reach an all-time high. So if you looked at the way the market closed yesterday, closed directly on the high, and then when the reopening came at 5 o'clock, we gapped up about $20, $25, hit that 33.7190. So that's going to be your new contract high on the June contract. And since then, we started to slip as a lot of these talks here started to take place. So it did have its biggest one-day gain in 2 years on Wednesday. So it was up like $115, $20 at one point. Again, dollar weakness, Federal Reserve Jerome Powell signaling that wait and see approach and just pushing back the hopes that the central bank would act quickly and cut rates. I believe if he cuts rates, that's where you're going to see them really come in with the Fed put and the stock market gets its lift off again. And I think that's where you get your rug pull on the gold market. If you get an economy that's coming back, that's where you start to see the gold silver ratio come down here. So looking at, again, on the gold market, it climbed to about 27% this year. That matched the 2024 performance, and that was where prices had peaked out. Now, if you're going to look at silver and copper and other metals that are out there, industrial metals, going down the board, you're going to see quite a bit of weakness here. So looking at the copper market to start with that, down almost 2% at the moment, trading at 459, ran into some resistance up at 474 before starting that pullback here. So we're going to want to keep an eye on some levels in that copper market because it's under quite a bit of pressure. And I think that BHP Group, they warned that U.S. President Trump's tariff spree could really trigger a global economic slowdown as the challenge really takes the trade flows into question. So if you look at BHP, they did post a solid quarterly production performance for key commodities, including copper, with production climbing 10%. So you're going to see a lot of these different companies really tap into some of these projects that are already set up that are cost effective for them to expunge quite a bit of supply out there. So I believe that that was one of the first headlines that hit that copper market. And then what happens is you get a little bit of a ripple effect on the silver market. And then you also had a mildly bearish story that came out on the silver market as well. So let's not trigger anyone. Let's take a breather here. So breathe in, breathe out. I'll let you know some of the details on this story. So the global silver market is expected to register the smallest annual deficit in 4 years in 2025, with U.S. tariffs being the key risk demand. And this is according to the Silver Institute. So send your hate mail to them, not to me here. So I don't want to hear it. So if you look at the silver market here, down about 2% right now, 62 cents lower at 32.35 on the May contract. If you're out of May, start to look at July because you're not going to have a lot of time left on the May contract. The low in the overnight session, about 20 cents lower at 32.15.5. The high was 32.92.5. Is that a resistance point? Well, you know, perhaps you start getting to the top end where you do have a couple things that I outlined in the chart pack here. And of course, that silver market has had an incredible snapback. Yes, it's not above $35. Yes, I've felt that in feelings. Check those at the door. So I looked at the charts and I looked at the nature of the way people are trading. And what it kind of indicated is that if silver does approach $34 to $35 because of tariffs, because of industrial demand, because of recession risk, I believe that many people would take some of those positions off the table that were dip buyers here or were too overweighted at that level there, and they might take a different approach, a wait and see approach, or a calculated risk option approach for playing the silver market above that $35 in the event that you do get a substantial breakout there. So what they said was in this report was that the deficit is expected to be 117 million troy ounces, and that is the 2025 annual outlook. That would take silver market to its 5th straight yearly deficit according to the report. So, okay, you hear deficit and you automatically think that, hey, price got to be going higher because there's a deficit. Well, if you trade agricultural markets, which I do extensively here, and you analyze USDA reports and things like that, it really becomes the rate of change on which things occur. And the rate of change on the deficit is starting to get smaller and smaller. And what happens is as we get closer to coming in with we've met our expectations where supply and demand are balanced, and then we start to produce some production surpluses here. So what you really want to see is the deficit get bigger and bigger, and you want to see demand go up and up. So in a perfect world, you would have regulatory risks, you'd have problems, you'd have high inflation where they're not able to produce as much, so the deficit gets bigger and bigger, and at the same time the global economy is starting to expand as things move on, and that's how you get silver prices going through the roof here. So there's a lot of economic metrics behind it, and that's what really impacts that silver market. So if you look at the demand side for the metal, well, it's expected to slip because of the fact that we do have higher prices. We're at $30, $35, things like that an ounce. And what's the cure for high prices? Oftentimes it's high prices. So it's going to weigh in on the jewelry demand and things like that. Yes, coin and bar consumption, which many of you people are, you are going to say and pound the table that you've got that there. But the problem is that only makes up a small amount of the demand when it comes to the silver market. You have to look at 54% industrial demand, and that's where things like recession risks and the global economy play into a role. So it's just the much more bigger slice of the pie here that we're looking at. So the extended period of the elevated tariffs, the further escalation in global trade wars could lead to significant supply chain disruptions. This is all what the report said, not what I'm saying. And the total silver supply is projected to rise 1.5%, led by higher mine production, according to the report. So that's enough on the silver market here. So again, you have copper selling off, you have silver coming off, copper boost in production, silver kind of a negative report there. Still questions around recession, trade wars, things like that. A small uptick in the dollar, a little bit of pressure on the gold market because it's overextended here. I'll most likely start looking at some key levels on the silver market or different ways to define risk in order to play in that particular market. Looking at the exchange traded funds. So this is now another little slice of the pie here when it comes to the silver market, is that you look at exchange traded fund flows here. And the exchange traded funds, well, they added 107,000 troy ounces of gold in the last trading session, and that was the 6th, if you're a trader, that's 6. So 6 straight day of gains. That'd be like 1, that's 6. So 6 straight day of growth. And then you go to ETF flows. They added 3.23 million ounces of gold holdings in the last trading session. And that would be your 4th straight day of growth. You're a trader, that's going to be 9. So that's something to look at there, is that we've had all this strength in the growth in the ETF flows. If the markets pull back, will we see some of those ETF outflows as traders book profits, or will we continue to see the inflows continue to take place? So you look at the year-to-date percentage change. Gold up 7.8%, and then silver up 2%. So these are the largest year-to-date percentage changes that we've tracked all year on the gold and silver market. But unfortunately, again, because of the industrial side of things, the gold-silver ratio at 103-1, and I talked about yesterday, don't let that ratio trigger you. It's not a valuation metrics here. It's not something that you should look at like that. It's really a sentiment of how the economy is going and things like that. Now, pulling the brakes back and going to a different market, one of the markets that I feel like has been really blacklisted this year and has been negatively impacted, and we've traded this market quite often. Many of our clients here, especially coming into December, we saw crude oil prices go from about $67, $68, mid 60s. It broke out to the upside. We got almost close to $80 before. The fact is once they brought Trump in the office, the market started to sell off here. We had one more dramatic rise, and then this big sell off again with the equity markets. The washout was that Sunday night low that everyone saw and hated, especially on April 9th. And if you're long silver, that was problematic there. But since then, prices have come up and started to consolidate. What I'm watching in the silver market is that, or I'm sorry, the oil market, is that oil prices rose for the second day. The Trump administration vowed to reduce Iran's energy exports to zero. So if you're trading oil yesterday, that was when it got its really big move up. And you got these confirmation of that, and that's when it really took off to the upside. You do have a bit of optimism over the U.S.-Japan trade talks, and U.S. sanctioned Chinese refineries accused of handling Iranian crude and saying that Tehran warned that nuclear talks would fall apart if the U.S. moves the goalpost as far as what's going on with their exports and things like that. So oil prices have fallen 30% from their high due to trade tensions, and we saw a bit of a rebound in the U.S. government data here yesterday, but it was a small build, like 510,000 barrels. And then you look at the API, that was another build, but not as big. So you do have some low inventory levels at Cushing, Oklahoma. So longer video, but I thought I'd give it to you because might not necessarily do a video. I'm still working on the other house over there. This office in here is downgraded to a bunker, so that's all I got to say. So Dow Jones slipping a bit more here, and U.S. equities are rolling over a touch as well. So got any questions, again, reach out to the trade desk, send an email to info@Blue Line Futures. Be sure to register. I'm going to send out the chart pack here today or tomorrow because of the fact that a lot of these markets are moving around. And of course, I'll cite a couple of these markets that I really like here that we are active as far as providing recommendations for, like Bitcoin, S&P 500, crude oil. We include those in with the precious metals. So remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.